Ladies and gentlemen, good day and welcome to the Tata Power Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Praveer Sinha, MD and CEO of Tata Power. Thank you, and over to you, sir.
Thanks, Robin. Good evening to everyone, and thanks for joining the Q3 FY24 analyst call. I am joined today by my colleagues, Sanjeev Churiwala, CFO, Mr. J.B. Patil, Financial Controller, Mr. Kasturi and Rajesh Lachani from the Investor Relations, and other team members from the finance team. We have already shared the details with you, but just for the benefit of everyone, there are a couple of issues I thought I would bring to everyone's notice. One is that the power demand in the country has grown at a very fast pace. We have seen a nearly 10% demand surge in the last quarter, and during the last 9 months also the growth has been nearly 9 to 10%. This higher demand is expected to continue in future quarters and future years also, considering that there has been a huge surge in demand in all sectors, whether it is the commercial, industrial or the domestic residential sector, as also in villages where we see that the consumption has increased tremendously because of the government's of RDF scheme. What we are expecting is that with the increased demand in power, Tata Power will continue to provide supply of power from all its existing assets. Coming to this quarter, this is the 17th successive quarter in which we have shown the PAT growth, thereby demonstrating that solid business fundamentals are there of the company. And this is especially heartening because majority of the profits have come from the core businesses, unlike previous years when we used to get large quantum of profit from our non-core business, especially the coal business. This quarter we have a PAT of 1,076 crore, which is nearly 2% higher than the last quarter. And similarly, our EBITDA has increased by 15% to 3,250 crores. On a 9-month basis, our EBITDA has jumped by nearly 34% to reach an all-time high of 9,342 crores. Similarly, our adjusted PAT before exceptional items has gone up by 4% for the 9 months to 3,000 crores. And this is on back of robust performance by all our core businesses, including generation, transmission, distribution, renewables, and also some of the newer areas that we have gone into in EV charging, as also in the rooftop solar. While we make huge progress in our various businesses, our commitment to net zero continues to be there, and we will become net zero by 2025, which as a utility we were the first one in the country to announce. During this quarter, our renewable business commissioned 72 megawatt of renewable capacity and 343 megawatt of capacity in our utility scale projects in last 9 months. And with our green portfolio and clean portfolio becoming nearly 5,600 megawatts. This of course includes our hydro, thereby accounting nearly 39% of our capacity being in the clean generation capacity area. We have one number of projects during this quarter, namely the 1316 megawatt of RTC project, and this is the first RTC project that we have from SJVN, which is a combination of solar, wind and battery storage. And with this, our project pipeline has become 4,750 652 megawatts. Over and above our existing 4,200 megawatts, we'll have nearly 9,000 megawatts of projects, renewable projects, which we would be setting up. With all this, we do expect that in next quarter, we should be in a position to cross 10,000 megawatts of renewable projects and move to nearly more than 50% of our capacity coming from renewable sources. Our solar EPC business has again reported a very good performance during this quarter, both in terms of revenue and EBITDA, as also our utility solar business, where nearly orders of 612 megawatt worth 2,849 crores has been received in this quarter. Rooftop business continues to see excellent traction with nearly 146 megawatts installed and nearly 87 megawatts of orders won in Q3. During the last 9 months, we have installed 350 megawatts of rooftop solar. And why I am emphasizing this is considering that Government of India has recently announced that 1 crore houses will be provided with the rooftop solution. Once the details are out and we know exactly what sort of capacities is being envisaged, we expect a capacity addition of nearly 30 to 40 gigawatt of rooftop opportunity in the next 2 to 3 years. And that's where I think Tata Power will play a very, very important role going forward. In all our renewable businesses, we have seen huge amount of growth, and we do expect that this trend will continue in the future quarters also. In our manufacturing plant, out of the 4.3 gigawatt of solar cell and solar module, the 3 gigawatt of solar modules have been commissioned and the manufacturing has started at our plant. And the 4th gigawatt of module manufacturing will start in next 2 to 3 weeks. Similarly, on our 4.3 gigawatt of cell line, the first cell is expected to be out in the month of April, and the plant should stabilize to the full capacity by June, July. We do expect that going forward there would be large number of projects, including the rooftop solar project of the government, the 1 crore that has been announced, which will use local make solar modules, and thereby we will have great opportunity going forward to meet the production that comes from this plant. During this quarter, we have energized 412 public EV chargers, and with this our total number of EV chargers which are operating, installed is much higher, is operating as 5,300. And this is also on back of nearly 73,000 of home chargers and 690 of bus chargers which are operating. We have recently tied up with Indian Oil Corporation to use their outlets to put nearly 500 of fast and ultra-fast EV chargers at different locations. Our T&D business has been doing consistently very good. In the last quarter, we won 2 bids of worth 2,300 crores. This is the 344 circuit kilometer Bikaner-Neemrana transmission line and the 80 circuit kilometer Jalpura-Khurja line with a total investment of nearly 2,300 crores. And all these projects will get completed in next 24 months. Our Odisha DISCOMs continues to perform very well. It has been a very challenging experience, but the teams over there have ensured that better quality service and reliability is provided to the customers. And that has been demonstrated by not only good service to the consumer, but also in terms of financial performance, whereby in Q3, the PAT has gone up by nearly 75% to 63 crores. And on a 9-month basis, it has become 217 crores. We have also installed nearly 3.6 lakh smart meters in Odisha and replaced nearly 27 lakh meters in Odisha out of the 95 lakh consumers over there. This has helped us to improve our billing efficiency and collection efficiency, and the results will start being seen in the subsequent quarter. Our balance sheet remains very steady in spite of increase in capital. We have spent nearly 3,600 crores in the last quarter, and but in spite of all this, our net debt has increased only by 2,000 crores and is at a very healthy level of 38,600 crores. Our leverage ratios are very healthy. Our net debt to underlying EBITDA is 2.86. It was in the previous quarter it was 2.7, and our net debt to equity has been virtually at one level. We do expect that our increase in capex in future quarters will also help us to generate better EBITDA and profitability for the company. During the quarter, the company also received $50 million out of the pending receivables of $125 million from the investment done in Zambia, and we expect that the balance will also be collected in next 12 to 14 months as per the arrangement agreed with the DISCOM in Zambia. Acknowledging all these efforts, CRISIL has upgraded Tata Power's credit rating from AA stable to AA positive, and India Ratings has upgraded from AA stable to AA plus stable, which I think is 2 notches improvement in last 1 year. As Tata Power continues to move forward with better performance and consistent performance, we do expect that our new investments, which is in our renewable business, transmission and distribution, as also the pumped hydro project, which will start in later part of this year, will start showing much better, consistent and a stable performance for the company in the future years. I thank you all for all your support, and this is especially required considering that Tata Power crossed the market cap of 1 lakh crore a few days back and continues to improve its performance going forward. I believe that all our existing operations will continue to do well in future, and we look forward for your continued support. I will now ask Darwin to open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening, sir. Thanks for the opportunity. My first question is, over the past 1 year, Tata Power has commissioned about 353 megawatt of RE capacity. What is the expected phase out of commissioning of close to 4.75 gigawatt renewable project pipeline here on? How much is expected in FY25, FY26, FY20?
Yeah, thanks, Sumit. This is Sanjeev Puriwala, CFO here. As you rightly said, when we look at our YTD commissioning is 353. Normally, we do a big commissioning towards year end. So the last quarter is supposed to be a big quarter for us, where we would expect another 250 to 300 megawatt of commissioning happening. But looking at our current bid, which is in the pipeline, while we are still working on our overall strategy, but looking at our date of commissioning in 25, we could commission anything between 1.5 gigawatt to 2 gigawatt, maybe closer to 2 gigawatt. And in the subsequent years from the existing pipeline, another 2 gigawatt plus will get commissioned. As you would have seen, the numbers as of now is smaller. That's because it was a strategic decision that we took many months back, given the very high sales and module prices, to defer some of the projects. so that the cells and module prices could bounce back to normalcy. Luckily, that strategy has worked, and as you are aware, that the prices of cells and modules have come down, and to that extent, we are back in profits in many of these projects that we are executing now.
Sure. So related question now with the cell and module prices having collapsed, and you are at the brink of commissioning your expanded cell and module capacity. Would it make sense to use this output for utility scale projects in India at present without implementation of ALMM? And what are the margins that you could expect to make on the manufacturing side in FY25 as you ramp up your manufacturing capacity?
So, as you are aware, that the ALMM will kick in from 1st April. So, many of the projects where they were given the concession till 31st March, if they have not got completed, they will have to only procure Indian make modules. So that's where our benefit is there, though the international prices have crashed. But I do expect that with this condition and also the new opportunity of 1 crore houses, which will have only domestic make modules, we'll have a great opportunity. In fact, there is now huge demand that we are seeing from various of the CPSUs and various of the other procurers who want to set up projects in the next financial year that they would like to tie up on a long-term basis from us. So we don't expect that we will have any challenge in supplying modules from our factory, and our margins to that extent will be quite protected.
Okay. So would it be reasonable to expect margins closer to 15% in manufacturing of cell plus module, or is it early to talk about that?
Well, I would always expect more than that.
Okay. Finally, a question on your, the line that we see on your cluster summary, cluster-wise summary. Has there been significant improvement in Tata projects in Q3 on a year-on-year basis or even quarter-on-quarter, which is driving some improvement in this quarter?
Yeah, the Tata projects has made profit in last quarter, and this is the second quarter in which they have made profits. So last 2 quarters they have made profit, and Tata projects will surprise me going forward, because all the projects where they had to make provision for the under recovery or losses has been completed, and hereafter it is only profit making that will happen in Tata projects.
Sure. Has there been significant increase in profit from Tata projects in this quarter? If you could give us the absolute numbers, maybe Sanjeev?
Yeah, thanks. No, I think the way to look at it, a significant reduction in the losses. So, if I look at the 9 months operations, what I had as a losses last year versus the profit I have, the difference is almost close to 220 crores. I think to that extent, Tata projects have come a long way. The last 2 quarters, we are starting to see the profits coming in, and with the kind of current working that is happening there, I think it's on a transformational path.
Excellent. Thank you. Thank you so much, and wish Tata Power all the best. Thank you.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much, and congrats on good numbers. My question is with respect to the future commissioning for Tata Power Renewables. Since ALMM will come in place, what kind of module price do you expect post 31st March 2024? I'm sure you would have tied up for those already. If you can give some color on the module prices there.
I can't do prediction of module prices, what will happen, but I can only tell you that there will be huge demand for domestic make modules after the ALMM kicks in from 1st April. So I think the commissioning of the plant has happened at the right time, and we will have a huge upside because of the market demand that will take place.
So from the Tata Power Renewables perspective, the consumer of these modules, where you intend to commission 1.5 to 2 gigawatt, has something been tied up for FY25?
Yes. So Puneet, the other way to look at it is, in our renewable business, when we look at our large-scale utility business, we already have 4.8 gigawatt of project under pipeline. So significant, and this pipeline consists of all the various bids that we have won. So when we look at the sales of the module prices considered in the bid versus our cost, we will definitely have margins over there. So we are not immediately concerned with how the market will behave. For the fact, couple of things will have to be kind of taken into consideration. A, the BCD of the cells and the modules will continue. To that extent, the price parity will continue to happen in spite of the Chinese cells and module prices dropping in, number one. Number two, as you are aware, most of the cells and manufacturing facility have been put on the backing of the PLI and the state incentives, right? So that will also count when we're looking at our returns. So I think we're in a very good position that we have commissioned a part of our modules. We already have a healthy pipeline of projects coming in. We have the productions of the BCTs there, and as well as the incentive put together. So I think at least we don't see a concern going forward. But you never know what happens after 1 year, 2 years. But definitely our pipeline is quite healthy as of now.
Understood. That's helpful. And if you can comment on, what is the progress in pump storage? Have you placed orders for equipment, etc.?
The pump storage, as we had announced in the 28th November, we are completing the feasibility and getting into the progress. Any pump storage would take easily 4 to 5 years to get commissioned. And hence, at the moment, we are trying to tie up with various things. At the right time, when we have the proper approvals from the board, we'll be coming back to you with more details.
Understood. Lastly, transmission projects also, you've once again started an initiative towards, bidding for that. How is the competitive intensity there, if you can give some color, and what kind of IRRs are you aiming for there?
I think the way we look at the transmission business, 50% of the bids on the market presently is still with PPGCL. And then the overall private sector market share is close to about 10%. We have recently won 2 bids, and I think we continue to work on further bids coming in, because as and when you develop a portfolio of bids, you are in a position to kind of dictate better pricing in the marketplace from your vendors and suppliers. And of course, we want to ensure that we are getting a good competitive returns on these bids, and without that, we are not bidding.
Okay. That's helpful. Thank you, and I'll come back in the view again. Thank you.
Thank you. The next question is from the line of Subhadip Mitra from Nuvama. Please go ahead.
Good evening, and thank you for the opportunity. My first question is with regard to the captive solar module manufacturing. Given that you're looking at, setting up, let's say, roughly about 2 gigawatts of capacity every year, is it right to assume that you would be looking at roughly 50% of module sales for your captive usage, and the balance 50 would go to, the external market, be it rooftops or otherwise?
So when we are talking about 2 gigawatt of our own rooftop, of our own utility scale, we also would be doing third-party EPC, and there would be some quantity that would go. Similarly, we are already doing something like 300 plus megawatt of rooftop, which we expect to increase to 500. I also mentioned to you that now that the big opportunity has come of 1 crore houses to be provided with rooftop solar. So I think we have huge opportunity both to supply within the country and also maybe supply some quantity outside the country. So we'll have to see what sort of market opportunities are there and what sort of prices and returns we are seeing. And we will take a call based on the market requirement.
Understood. Secondly, on the transmission side, given that there is such a large opportunity opening up over there, is there any, target you have in mind as to, an X percentage market share or X quantum of projects that you would like to keep on winning every year in transmission?
We don't look at investments on those principles of market share. What we are more interested in, what sort of returns we can get from these projects. So we don't want to just for the sake of market share or just for winning projects, take any project at any margin. So for us, if it is not meeting the threshold of returns, we would not take such projects. So opportunities are phenomenal, whether it is in transmission or renewable or it is in any of the other areas that we are seeing. But for us, the guiding principle will be what sort of return is there and what sort of risk and reward are there.
Understood, sir. And what is the ideal threshold for returns that you typically look at?
Very difficult to say, but you have seen how we have been in a regulated business. Anything above that is the minimum that we would expect.
Understood. So lastly, I will refer to slide number 41 of your presentation, where you've given the 9-month breakup of the income, EBITDA, and PAT, and cluster-wise. So firstly, thank you very much. This is very helpful for us to understand it in detail. Secondly, just wanted to understand the last line over there, which is the other segment that includes Tata Projects, Nelco, and other eliminations. What at least we are able to decipher is that out of the overall hit that has come from the coal front, maybe there's 1,000-1,200 crore kind of a hit that's coming over there. So while the renewables and the transmission pieces have all contributed maybe 300 crores and offset that hit, there is a large benefit that is coming from that other piece, almost about 1,000 odd crores. And maybe 225 crores of that is Tata Projects, as you mentioned. If you can throw some more light on this, because that's a very large piece of difference.
Which line are you? We are in slide 41. Are you referring to the line which is others, T&D, including TPADL, TPCL elimination?
I'm referring to the fourth line from the bottom, others including Tata Projects, Nelco, and intercluster eliminations. So the YTD FY24 number is negative 413, and the YTD FY23 number is negative 1426. That's 1,000 crore gap over there.
Yeah. So let me explain you. This is basically the dividends that we receive from various associates and joint venture company. But yes, to that extent, this will also include the dividend from our coal mines, which we are not spelling out specifically out here. But what you can see is on a YTD basis, to that extent, it is lower by 1,000 crore, and that has been fully mitigated from income from the core businesses, which is coming from our renewable, C&D, transmission, and our distribution businesses.
Okay, probably I'll take this offline with Rajesh. That's
yes.
My side. Thank you so much.
Sure.
Thank you. The next question is from the line of Sudhanshu Bansal from JM Financial. Please go ahead.
Yeah, congratulations, sir, for the good set of numbers. How do you see the trajectory of coal prices and power demand for next 2 to 3 years? Secondly, any color on the Mundra PPA will be very helpful, sir.
So on the power demand, I think you have seen last 2 years, the CAGR has been 10%, and I do expect that this sort of demand will continue the subsequent years also. As far as the Mundra is concerned, the plant is operating under Section 11, and this is applicable up to 30th of June. We are in active discussion, but since the Section 11 is already in force, there has been a little bit of delay in finalizing, because this will eventually be applicable post the Section 11 period gets over. So we do expect that something on similar lines will get finalized much before the Section 11 period gets over.
And sir, about the coal prices?
Well, the coal prices is very difficult. I don't think there is anyone who can predict what the coal prices will be there. But what we have seen in last 6 months is that the coal prices have stabilized, and it is expected to be in the same range, provided there are no other geopolitical changes that takes place globally.
Okay. Thank you, sir, and best wishes for the continued good performance.
Thank you. The next question is from the line of Apurva Bahadur from the Tata Power Company Limited. Please go ahead.
Hi, sir. This is Apur. Sir, wanted to understand this dividend from Italy. I think 416 crores we have recognized. Is it one time, and what sort of cost is payment?
Yes, sure. I'll take this question. Just wanted to understand, you're from which company? Our system is not showing this.
I'm from Goldman Sachs.
You're from Goldman Sachs, okay. Luckily it was showing that you are our employee in the system. Yeah. No, so basically if you see, this is the turnaround story of one of our associate company joint venture in Zambia, where we have hydro plant, which has been underperforming for many years, and there were tariff disputes which have now been settled. And because the tariff dispute has been settled, the company is now making profits and have decided to declare dividend of $100 million, and we have received a $50 million in this particular quarter. But that profit, which is reflected on the PAT as 311 crore, is more than less than offset by the one-time gain also that we had because of Section 11 in the same quarter last year. So net is about 30 odd crore. So it is not really impacting to the extent the bottom line.
Right, sir. No, I wanted to understand that will this be a recurring feature, this 416 crore benefit? Or what's the annual PAT of Italy typically now that the direct dispute is settled?
So let's put it that way, that given that this is an accumulation of the profit which they are now distributing, of course you received a bigger number. But this company is capable of declaring a dividend, a yearly dividend of maybe $25-30 million going forward. So yeah, we would think that there would be some recurring income coming through every year, but this company has just revived, right? So we are kind of at the moment crossing the fingers and see how the performance shapes up to be able to give you a very confident answer. Maybe 4 quarters down the line, we'll have better comfort. But the good part is this company, where we were not kind of looking at any cash flow coming through, have been revived, and at least we are receiving a $50 million. To that extent, of course, the company's return profile improves.
Right. So second question is on the pump hydro projects. Wanted to check at what stage are we in terms of CE approvals? Has the DPR been concurred and all the approvals in place?
So all the documents have been submitted, whether it is for DPR or for the environment clearance and all. And these are going through various motions of approvals in various departments. So we do expect that by first quarter of next financial year, we'll have major approvals. And hopefully in the later part of this year, maybe by third quarter of the next financial year, we will be in a position to start work.
Sir, by CY25, around mid of CY25, we expect to start work, and then it will take another 4-5 years. So I believe I saw in the PPT sometime 27-28 is what we are guiding for the commission.
Yeah, we are trying to stick to some sort of similar timeline.
So are we beginning work before we are getting all the approvals as civil work and all?
No, we'll start work only after we get all the approval, and that's why I'm saying that maybe in the last quarter, the third quarter of FY25, we will possibly start work.
Okay. Sir, and for these pump storage projects, how much of capacity is tied up for group captives with the Tata Group? Any color on that?
So, those are still being discussed, and we'll figure it out.
Sure, sir. Last question on this module manufacturing. If you could share the cost structure, what's our final cost of production for these modules, or how much closer are we to the Chinese prices without the duties and with the duties as well?
As I mentioned to you, these modules are on a different footing altogether compared to what prices you see in other countries, because this is the DCR, and any module that comes from outside, there is a customs duty, and also they are not approved in the list of module manufacturers. So this has to basically cater to the local requirement within the country, and we need to do the pricing based on that.
So what would be our cost?
Those details are being worked out, and once we are ready with that, we'll possibly next quarter we'll be able to give you some idea.
Sure, sir. Thank you so much. All the very best.
Thank you.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Just one question on the pump storage. You are close to starting construction in the next few quarters. And let's say if you don't sign up the capacity before you start construction, as you look at financing, I understood previously banks were somewhat unwilling to lend to untied RE capacity. Is that for pump storage, if you do start construction before tying up, raising finance, is there any challenge on that front? Just wanted to understand how do banks lend on these projects?
So what we are seeing is that there is a huge amount of bids which are coming up. In fact, at next few weeks and months, we are expecting nearly 6 to 7 gigawatt of bids which are coming, which are the FDRE bids. So we are seeing huge demand. There is also huge demand from industrial and commercial users where they are looking at 24/7 power. And this will be a packaged power of solar, wind and pump storage, so as to give 24/7 availability of green power. So we do not expect that we will have any challenge in tying up this quantity of power.
So just wanted to understand, you'll basically tie up this entire 2.8 gigawatt before you start construction, right? That's
Not
what you
necessary. Not necessary. We'll take a call on that. So let's see how the market evolves. But yes, some quantity will definitely get tied up, but maybe not 100%.
Okay. Thank you.
Thank you. The next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes. Firstly, on the TPREL side, when I look at the 9-month numbers, excluding other income, the EBITDA margins are at about 77%, which clearly has been on a downward trajectory despite capacity additions that we've been doing. So just wanted to understand over the years, what's the reason for the decline in EBITDA margins over here, and over the next 3 years as we commission capacities, how should we look at the EBITDA margin for TPREL?
Well, the EBITDA margin is dependent on the project cost. And as you have seen, now that the module prices have come down and large-scale projects will come in the last quarter as well as in the subsequent 2 quarters, you will see a huge improvement in the EBITDA.
So for the coming, let's say 2 years, if we commission the remaining capacity, what sort of EBITDA margin should we look at for TPREL?
I won't be able to give you a guidance at this stage, but definitely it will be much better than what we were doing it 1 year back.
So I think if you look at this business and also generally as an industry, the EBITDA margin would be in the range of 75-80%, given that this has a mix of both solar and wind. And this particular quarter, normally third quarter, the wind is always low in terms of the generation. But yeah, what we see is once we go live with our cells and modules, and with all the projects that is in the pipeline, this will keep on improving in the coming quarters. Deliberately, as of YTD, as I said in the earlier discussions, that we only have commissioned 363 megawatt, and of course to that extent the fixed cost absorption did not happen that much. But in the coming quarter, we will have further commissioning happening, and the bigger commissioning will happen in the first 2 quarters of the next year. So you will see sequentially the improvement coming in.
Okay. And in terms of commissioning, I think you mentioned 1.5 to 2 gigawatts for FY25. How much would come in FY26?
Given a current bid pipeline and the COD commissioning, definitely as of now, we would expect another 2 gigawatt to come in, and if we are able to win something more in the coming quarters, this can go up to 3 gigawatt. But yes, definitely 2 gigawatt is for sure that we will be commissioning in 26 also.
Okay. And on a medium to long-term basis, what's the optimal capital structure that you're looking for in terms of, let's say, the debt to equity or debt to EBITDA?
It's a very complicated answer because, again, you have to think about whether you're looking at a console level, are you looking at the specific platform level? Because at a platform level, when you look at the... Sorry?
At a consolidated level?
Yes, at a console level, presently our debt to equity is about 1 time, right? And with all our plannings, we don't think that will go anything beyond 1.5 to 2 times in the near future, right? But at the entity levels where we plan the bets, the ratios will be different. But finally, what we do intend to ensure that with all our non-core that we keep on selling from time to time, equity raise, but all that has to happen. We keep our debt to equity definitely below 2.
Okay, fair. Lastly, in the 4.8 gigawatt of under construction projects, how much of it is wind?
We will have to call that out if you know that.
That number is there.
It's there. I'll get some slides.
Slide number 9.
Yeah. If you could go to slide number 9, you will have the breakup of that.
Slide number 9.
Yeah, you can have a look at it.
Okay. Okay. Fair.
Thank you.
Sorry, this slide actually includes hybrid as well, right? Which would also have a wind component in it.
Yeah.
Yeah. So if I were to take the wind component in the hybrid as well, I just want to understand how many wind capacity of wind that you have under construction right now, including the component in hybrid.
So we'll be able to share that with you. We'll give you that. So,
yeah. But I think it's better to look at it, when we are bidding for solar separately and for wind separately. But when we bid for the hybrid and also for the RTCs, it's the various combination that we need to do for solar, wind, and battery, right? So unless we'll have to look at it in that sense and as a combined sense, because the installed capacity and the PPA capacity will also differ. So my urge to all of you would be not to break up that, otherwise it will become more and more complicated.
Okay, I'll probably look to get that offline. Yeah, thank you.
Yeah.
Those are my questions. Yeah.
Thank you. The next question is from the line of Anuj Upadhyay from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, first question relates to your standalone business. So the decline in profitability, is it purely because of lower dividend income or there's some other factor as well? Because our sense was the Mundra under recovery would have gone significantly due to Section 11. But in spite of that, the profit is down to nearly 1/3.
Yeah, so basically the profits that we get from our coal mines have significantly come down, and that is what is contributing to a lower standalone. But for us, it's always looking at the consolidated picture.
Okay. And your margins across the EPC continue to remain quite volatile. This quarter we are back to close to 5% kind of a margin. Last quarter probably you have given a guidance that a low margin order book is more or less being, the execution has been complete. So now we would be executing projects where margins are relatively at closer to a double digit or somewhere in the range of 7 to 9%. So any comment on that, sir?
Are you talking about the EPC margin?
Yeah, EPC one.
Yeah. So the EPC margin, our targeted margin is close to 5%. But as you're right, the market have been very, very volatile, especially because of the commodity prices, FX, sales, modules. It is now stabilizing, and we think with the current bidding pipeline, we can still targeting that 5% kind of EPC margins.
So this applies even to our current order backlog, order book. Over there as well, we are targeting close to 5 to 6% kind of an EPC margin.
We're talking about PAT margin of 5% on the EPC business, that's correct. But of course, that is what we're targeting it. It could be a little higher or lower depending upon how things move. But when we do a particular bidding, we kind of target a EPC margin of 5%.
Okay. And any possibilities, sir, where Mundra can participate in the open market? Currently, whatever selling has been happening, I believe it's under the Section 11. But any possibility where you can participate in the merchant market, provided we are venturing into a scenario where the country could play the deficit going ahead?
I think Mundra today is operating at full capacity, and all the procurers are taking because it's a very efficient plant. And if they don't buy from Mundra, then they will have to buy from the market at a much higher price. So none of the procurers are ready to leave the opportunity to schedule power from this plant. So I don't think we will have an opportunity to sell outside the procurers. But in case they don't take the power, then of course we have the freedom to sell in the open market.
Okay. And lastly, can you just mention the offtake price for Mundra? Like what is the generation cost and what price they are selling to the consumer?
It's there in the schedule. Gujarat SLDC releases the on a daily basis the merit order. I can check and let you know.
Yeah, and also I think it's basically a cost plus markup for us. So to the extent what matters to us is the pecking order, so that all the procurers can take our power. Beyond that, I think the cost doesn't matter because it's still under Section 11 for us.
No, fine. Just wanted to get a sense, if at all we get an opportunity in the open market, and what would be our cost and the spread on the merchant rate.
It's available. We can provide you separately, but it will not actually serve a purpose because it's all cost plus markup. So, depending upon the coal prices and other things, it will just move up and down. So it's kind of an arithmetical formula.
Sure. Thanks, sir. Thanks for this.
Thank you.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, hello. Yeah. My question is on your EV charging business. There was are you aware whether Tata Motors is also engaging into EV charging business, and how does that fit into the collaboration with Tata Motors?
So I've not heard about that. We cater to full Tata Motors requirement, whether it is for the four-wheelers or it is for buses or. So I don't know of any other opportunity that Tata Motors is working on EV charging. All their present requirement, whether it is for home charging, public charging, bus charging, fleet charging, is being done.
Okay, that's very good. And secondly, if you can comment a bit on the profitability even on a Y&Y basis was a little weak for the renewables business despite adding significant capacity. How should we think of it? Is it a function of part utilization, higher depreciation? How should we think of that?
So what happens, as Sanjeev mentioned, that it's very difficult to do on a quarter-to-quarter basis because there are certain periods in the year, in certain quarters, when you have better radiation and you have better solar generation. Similarly, there are certain periods during which you have better wind speeds and better wind generation. So I think you need to do it on a 12-month basis rather than just trying to do on a quarter-to-quarter basis.
Okay. So what was weaker this time, the wind part?
Beg your pardon?
So if you can comment on what was weaker this time in terms of solar or wind, where was the PLF lower?
See, what happens is for us, what is important metrics is the availability of the plant, and all the availability, whether it is solar or wind, are very, very high. It is benchmark in the country. So our availabilities of the plant, solar is virtually 100% and the wind is also in 98% plus. Secondly, we have shared what is the PLF for the solar and wind. It's in slide 49, you can see it.
Right. So with the other income part, 45 crore versus 106 crore, I thought that was generally operational income, but what exactly is that, if you can throw some light there?
It will be a combination of some operating income, scrap, some interest income on investments, a combination of that. But if you really see for the quarter, the number is quite small, 45 crore.
Correct, versus 106 previous quarter. So
Yeah.
Okay, fine. Thank you so much. Yeah.
Thank you. The next question is from the line of Mithil Buva from unlistedindia.com. Please go ahead.
Yeah, thank you for the opportunity. Coming to slide number 40, if I see Mundra Coal and Shipping, the profits are down from 924 crores to 89 crores. Now, just to understand, like, because of the lower coal prices, the profits are down, right?
Yeah, that's correct.
And so Mundra is just a cost pass-through, which means that we are not benefited by the lower coal prices.
No, so yeah, in a way, whatever coal we are procuring, that plus cost plus the markups that is passed through. The drop in coal prices to that extent doesn't benefit. It's kind of more on a rolling basis. Yeah, but on an annualized basis, you're right. But then what matters to us is a contribution that comes from coal mines, which is a PAT contribution. That has significantly dropped. As a result, you see overall lower profits from thermal generation, coal and hydro.
Okay. So I was asking this because we have invested more than 25,000 crores in the Mundra and coal business. And if the profits are to remain at this level, then we won't generate sufficient cash profits to repay our debt, right? That's the concern actually.
See, you need to look at it that from a loss making today, we are not. So to that extent, I think we need to look at it in totality rather than just looking at it in terms of what sort of return.
Okay, but in the future, can we expect like good profits from standalone Mundra also, or the cost pass-through will be very minimal only?
Like in today's scenario, when we have Section 11, it's cost neutral. So whatever is the actual cost of generation is getting paid to you. In future, based on what sort of the SPA we enter with them, we will have to see what sort of returns the business is able to give.
And to your question, if I add, there are two approaches. A, when you look at the PAT contribution coming from the coal mines, that is perfect.
Yeah.
But on top of that, you also get the dividends, right, which on a consolidated basis gets netted off. But when I look at the cash flow, a significant cash flow comes from the dividend perspective.
Okay. So my second question is, like, the management has guided that the revenue will double in the next 3 years to around 1 lakh crores. Can you just give a brief on where the revenue is going to rise actually? Because in the last 3 years, the revenue has risen only in the Odisha discoms mainly. So can you just give a brief of where the revenue is going to rise in the next 3 years?
I think the presentation that we had made in the analyst meet, if you see that, it will give you a very good idea that where we are putting the capex and where the growth will come. So I think it is a direct correlation to that.
I think part of the question we tried to answer in our renewable pipeline itself. We're talking about 2 gigawatt of commissioning happening next year and more than 2 gigawatt happening in 26. So currently we are at 4, and then the 4 itself, we are talking about 9 in the next 3 years' time, right? So I think to that extent, that will contribute a big profit. Plus, I think the new manufacturing also we spoke about, the commissioning of the cells and modules, that will also start contributing towards profit. The opportunity in rooftop solar is big for us. We will also look at that. So I think it is a well thought through strategy in terms of looking at where we want to reach in our aspiration 3 years down the line, and we're tracking on that.
So, thank you, sir. Wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Dr. Praveer Sinha for closing comments. Over to you, sir.
Thank you to everyone for joining in the call. And in case you have any further queries, you can connect with our investor relation team, and we'll be more than happy to share with you. The presentations have been made quite detailed, but if there is any further improvement that you would like in this presentation or any more details, please connect with us, and I'm sure with your support we have been able to get a market cap of more than 1 lakh crore, and we are now looking for next milestones, and I'm sure you will support us in this direction. Thank you everyone, and take care and good night.
Thank you. On behalf of the Tata Power Company Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your line.